Hi, this is Jackie Ann Patterson, and I am recording this video to show you how I do my weekly market analysis. I have been writing a newsletter called Divergence Alerts for about 10 years now and have developed a process for staying on top of the market that I think has helped me quite a bit, especially in the recent volatile times. I do actively invest in the things that I'm talking about. And so I'm just doing this for educational purposes and in the spirit of community. And I have relied on back testing results in the past. I don't really have any to show you at this time. This is just my standard disclaimer. As I go through this, if you have any questions, please comment on this video, either here on YouTube below or on divergence-alerts.com. The goals that I have of the weekend market status is to form opinions on the long term and the short term of the market directions, both stock market and bond markets, and also to look for specific opportunities and find the areas that might get better than average market performance. Overall, what I'm looking for is what to do next week, which is a pretty common question, I would say, out of the stock market. Now, I take a systematic approach because there is just so much information out there, and there is so much coming at us from the media that having a set of objective gauges to monitor and checking those at regular intervals is a way that I can control the flow of information and kind of keep it real, make sure I'm looking at what matters and not letting in too much hysteria to color my investing. And overall, I'm trying to limit my risk in the markets. Now I'm going to record two videos today because I have two different systems. So, and often they are in alignment, right? At this time, they are presenting opposite information. So that's kind of uncomfortable, and it's also a diversified way to invest. So I'm going to talk you through each of them in separate videos. So first I'm going to talk about ETF rotation, a mechanical investing strategy in this video. And then in the next video, I'm going to talk about my tools for discretionary investing. So by mechanical strategy, I mean something that is just very simple, and it's called ETF rotation. And it takes just a few minutes a week. The rules are very concise, and I'll show you exactly what they are. Anybody could do it, and it doesn't leave much to the imagination. So it's a very clear-cut approach, and I like that very much. The other thing I like about it is that it's got very well-defined rules for when to get into the stock market and especially when to get out of the stock market. So that gives me the confidence to invest more in it. And like I say, I am investing my own money in this rotation. So as we talk through what it's showing you today, I will tell you about the positions I have, and you can decide for yourself if this is something that would suit your temperament. Okay, so it is a momentum strategy trying to find the areas of the market that have the highest percentage gains over the past 6 to 12 months. So I back tested this, and momentum gave the best performance historically. And I measure that momentum with a rate of change indicator, which is simply the percent change over time. And that includes dividends. And what I use to measure the market are ETFs that represent different areas of stocks and bonds and domestic and international. And I will show you what those ETFs are in just a second. This slide shows you the rules, which is from my book called The Truth About ETF Rotation, which is up on Amazon. And if you're going to go get the book and read about this in detail, look for the third edition. It's got the most recent information. And what I do is each week I assess the portfolio. I don't wait for the end of the month because stuff happens in the middle of the month too. So I'm looking each week, but I don't necessarily take action. Um, what the main thing that would cause action is looking at the 114-day total percentage gain, and that's 114 trading days. So I hold the top two of my 7 candidate ETFs as long as they've got a positive gain over that 114 trading day look back. And I came up with 114 trading days by doing a lot of back testing of the different possible settings, and all of this is in the book. And then found a place where it seemed like there was a lot of good results coming out. Now, when I do this, I pick the top 2 that have the 2 best rate of change or percentage gain, and I hold on to them as long as they're in the top half. So out of 7, that would be if they're in rank number 1, number 2, or number 3. Once something falls to number 4, it's out, and then I'm going to buy the highest one that I don't have that's in that has a positive gain. So when I'm doing this, this does have a very well-defined exit strategy that the ETF would get traded out if it no longer has a positive gain over the past 6 months. So that's kind of like a stop loss. It's not the usual way of setting a stop relative to where you bought it, but it is watching the performance of the instrument and cutting out when the performance goes bad. Um, and it also has the means to sell a ETF when it looks like there's a much better performer out there. So these are very, very simple rules and something that's simple to apply. And in deciding this, what else can I tell you about it? There were some questions about how did I decide on the selection of ETFs and when do I change that? So that kind of brings me to the next slide of these are my favorite ETFs for the rotation. And I am using um, the IVV instead of SPY, kind of for historical reasons back when there were commissions. Commissions weren't charged on IVV. And as you're probably very well aware, the SPY and IVV track the S&P 500 large cap stocks. And the, um, the IWM and IJR track the small cap stocks. And they have 2 different ways of assessing what's the prime list of small cap stocks. Then the MDY and IGH follow mid cap stocks. So you'll notice that this is dividing up the market by capitalization. I did also look at dividing up the market by sectors, but that didn't perform as well. And part of the reason it didn't perform as well is because going back in time, the sector funds were all large cap funds. So when the time came for small caps to do well, then it wasn't performing as well because you're stuck in large caps. Now there are small cap sector funds available. So you could fix that. It does add a whole lot of complications to the trading. And when I tested that, it just wasn't worth the effort to me to break out the different capitalization and sector ETFs. So those are the stock ETFs. I also follow the bond ETFs of AGG, which is the total US bond market, all maturities, treasury, and corporate, and TLT, which is the long maturity treasury bonds. And TLT is in there partly because it was the stimulus vehicle of choice in the credit crisis. Now, we just had the COVID crisis drop, and it looked like corporate bonds got more support. But I didn't go back and change my ETF in the mix at this time. What I'm tempted to do is to add gold into the mix because I see gold is doing so well and is probably something, and it's certainly something that I do hold separately from this ETF rotation strategy. And the thing is that I previously had done some back testing, mixing in commodities like gold with the stock funds. And it seemed like it just didn't work out too well. Those two markets moved to a different beat. So it was very hard to, and impossible for me to come up with one selection that made it all work out okay. Just on the topic of changing the funds, I don't really have a designated time that I look to do this. It's more when I've seen performance that wasn't working out. For example, I used to have the inverse fund SH in there and trying to capture gains when the market was going down. And it turns out the bottoms come in so fast and you have to be so quick in and out with a short fund that it wasn't really making money. And so I took out SH and I put in MDY. So it takes me really a couple years to evaluate how this is doing in live trading and decide to make a change. And it's probably an area that I could improve to have a set schedule to review what funds are in. But it's more when the performance moved me. So the one other area I didn't talk about was the international funds. So EFA covers the Europe, Australia, Far East, the developed markets, and EEM covers emerging markets like Brazil, Russia, India, China. So those are also in the mix to be able to shift to some of the faster growth areas when the market dictates. So again, I switch between these different ETFs depending on the rules I showed you in the slide before. Now you can do this too. I've got some sample ranking tools available for free at truthaboutetfrotation.com. And this spreadsheet allows you to put in a list of ETFs and set a look back length and then hit go and it'll rank them and sort them for you. It's getting the data from the Yahoo database and that it works okay for the purposes of experimenting, I would say. Over time, I found some issues with the way the dividend adjustment can accumulate errors in the calculations. So for that reason, for my paid newsletter, I use data from TradeStation, and then I have a process to check the websites for the ETFs for the dividend data and manually adjust for dividends. So just a note, not using the dividends properly can result in about a 3% error, and that's a missing gains of 3%. So it really is important to get out there and get the data clean and with the dividends. Okay, so let's look at what is really on the website and what is happening. Let's see, here is the website. So this is the page I mentioned, the Truth About ETF Rotation, and that URL resolves to my main Own Mountain Trading company. It's got a link to my book on Amazon, and it's got this box where you can enter your email address and you'll be put on my mailing list. You can always opt out. It'll send you a series of email in the beginning, and then it'll be pretty sporadic after that, depending on when I'm emailing versus when I'm skiing. Okay, so after signing up for that mailing list, if you decide to join the Divergence Alerts service, you would have access to the rotation page on Divergence Alerts. And it has a whole lot of information. I'm just going to scroll really fast, describing what the strategy is and keeping you up to date on any changes that I make. And then talking through the recent action, you can see all of the dates of when this traded. It has not been all that active. I would say a couple, 3 times a year it makes a trade. Then it'll get into a patch like we've had recently where it gets very kind of very volatile. with the market and the rankings change a lot, then it'll settle down for months and months and months, get very boring, hard to keep up the discipline to keep looking at it. Part of the reason I write a newsletter is to keep me in the discipline of looking at it. If I can look for you, be my reason to look, and it will help me to care for my own investments. Okay, what I'm showing here is the graphic view of the ranking of the ETF rotation, and this is for Friday, September 4th, the last time we have data. Today on Monday, September 7th, the markets are closed for Labor Day. And so you can see the ranking that all of them have positive ROC. You can tell because they're above zero and they're green. And the highest gains have gone to IWM and IVV, EEM, and MDY. Now, this is for Friday, and as it turns out, I look at this every Thursday to make a decision on what I'll trade with the model portfolio. Then I send out that information on Thursday night, excuse me, and then on Friday morning, make the trade. So based on Thursday's data, IWM and MDY were swapped. So MDY was up top and IWM was in fourth place. So what I'm actually holding right now is MDY and IVV. So I will wait until next Thursday to see what the rankings are then and make any changes if that's required. So that gives it a little bit of stability not to change every day when you see a change. This website is updated every day, so I encourage subscribers to pick their own day of the week to trade if they would like, be doing something different, and use it kind of in their own way to have a little bit of their own results so that it's not all of us moving in the same lockstep. So this also posts the rotation results for the leveraged ETFs. All of these take a 3x leveraged approach to the underlying markets that they're tracking. You'll notice this was not on my favorite ETF sheet. So this got way too volatile for me to stick with during the COVID crisis. And I had recently started before, so I had built up some gains and they were immediately wiped out with the COVID crisis. And I said, wow, this is too volatile to keep doing this. So when you see that, 100% gains, that look back period is coming now towards the end of March of 2020. So yeah, from that dip in the stock market, the say SPXL, which follows the S&P 500, has doubled. The thing to realize is that this system did not have a buy signal at that time. So if one were to rush out and say, hey, that's top ranked at 100%, you'd be buying something that has gotten very overbought and has extended itself quite a ways from the mean, which might be due for a pullback. And we'll see that when we look at the next system. I did say that I have two different approaches to trading. This has been the mechanical approach that boils things down to the holdings. I post the number of shares that I have traded. So as I mentioned, I'm in IVV and MDY and no longer doing the leverage rotation. Also post the current ranking by the numbers so that you can see it in the event the graph is not clear or you don't want to load big pictures on your phone. You'll be able to get this information. So that is trading strategy number one. And I'll be recording another video for trading strategy number two. And in closing, what I want to show you is how you can sign up. So I've got a sale going. You can take 25% off your subscription through September 10th. Come to divergencealerts.com. Scroll down. You can read how wonderful everything is and click this link. Click here for subscription information. And there is more information and there are sample newsletters for you to check out. Every one of these levels contains the ETF rotation that we just talked about. The bronze ETF rotation, it contains only ETF rotation, and it's priced very, very reasonably. I mean, it's $3 a month at this time, or $29 for the year. And to get at that, you have to read carefully these terms, agree to them, and hit I agree if you agree. And then that will take you to a table of PayPal buttons, subscribe buttons. And I use PayPal because I'm not set up for the security to manage anybody's credit card. So PayPal can do that for us. Set up the subscription. You are able to use a credit card with it. And then you will have access to the website. And you will also receive each week an email from me with the results of my market status. And depending on which level that you choose here will dictate what you get. Okay, so that's it for this video, and I am going to sign off and record the next one for the discretionary trading.